India Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mitesh Jain from CDR India. Thank you, and over to you, sir.
Good evening, everyone, and thank you for joining us on Everest Kanto Cylinders Q1FY26 earnings conference call. We have with us today Mr. Puneet Khurana, Managing Director, and Mr. Sanjeev Kapoor, Chief Financial Officer of the company. We will initiate the call with opening remarks from the management, following which we will have the forum open for a question and answer session. Before we begin, I would like to state that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation shared with you all earlier. I would now request Mr. Puneet Khurana to make his opening remarks.
Good evening, everyone, and thank you for joining our earnings conference call. I will begin by starting an overview of our performance for the quarter, followed by a Q&A session. We are pleased to share FY27 has begun on a strong note for EKC. In Q1, consolidated revenue stood at 386.9 crores, up 12.9% year-on-year. This was driven by healthy demand across both our domestic and international businesses. Consolidated EBITDA came in at 61.3 crores, up 47.8% year-on-year, with margin at 15.8%, while PAT for the quarter stood at rupees 51.6 crores, up 84.9% year-on-year. This includes an exceptional gain of 12.6 crores, representing an employee retention credit received by CPI Industries, our US subsidiary. Our standalone basis revenue were rupees 237 crores, up 20.9% over the same period last year, with margins improving to 17.2% from 9.4% in Q1 FY25, and PAT at 26.1 crores, up 122% at 22.8% year-on-year. Our Indian operations delivered strong growth with revenue at 237 crores, up 21.1% year-on-year, and EBIT at rupees 34 crores, up 143% year-on-year. The US business also performed remarkably well, with revenues of rupees 109 crores, up 21% year-on-year, and EBIT at rupees 27 crores, up 83% year-on-year. Given that the US market in order-driven performance may vary from quarter to quarter, however, we expect the region to perform exceptionally well for this year. Together, these results highlight the strength and balance to our geographical portfolio. On the policy and sectoral front, the government continues emphasis on CNG adoption, clean energy, and high-tech manufacturing in creating a favorable environment for high-pressure gas storage solutions. Emerging applications in areas such as compressed biogas, semiconductor, and green hydrogen are gaining momentum, and our high-pressure gas cylinders are already enabling safe and reliable storage in these segments. Our capacity expansion front, our both facilities in Mundra in India and in Egypt are progressing as per plan. These state-of-the-art plants will be instrumental in enhancing our capability to cater to growing needs for domestic and global customers. We expect both facilities to come on stream during the current financial, enabling us to step up in supply capability from year 27 onwards. In closing, the first quarter has been strong start of the year with healthy demand visibility, upcoming capacity addition, a widening set of applications of our products, and a strong balance sheet position. We are well positioned to capture the next phase of growth and continue delivering value to our stakeholders. With that, I conclude my opening remark and I request the moderator to open the floor for questions.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and then one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, to register for a question, please press star and then 1. Our first question comes from the line of Sukrit D. Patil from Eyesight Fintrade Private Limited. Please go ahead.
Good evening to the Everest Kanto team. I have two questions. One is for Mr. Khurana and one is for Mr. Kapoor. So my first question to Mr. Khurana is, with the demand rising in CNG and hydrocarbon cylinders and global expansion underway, how are you planning the next big step for Everest Kanto? Are you building a roadmap to move beyond just cylinder supply towards smart gas storage, AI-led safety features, or partnerships that can help Everest Kanto play a bigger role in the clean energy infrastructure ecosystem? Yes, thank you.
Just to give perspective, definitely, on CNG and hydrogen, we are building new products. We continue to, invest in product development activities. On AI, this is primarily new subject for us. So we are definitely exploring AI as the aspect of improving our processes and, more efficiency at plant level. And what is the other question you asked? Sorry, I missed anything else that.
Yes. So the other question was, is there a roadmap which you are planning just beyond your? Yeah. Should I?
We continue to be, strong in the cylinder business and, product development in cylinder. And, in our business, we are catering across wide spectrum of industry. So it's sometimes challenging to go beyond just the focus on the cylinder business. So, the cylinder business itself has a lot of, bandwidth it takes of ours. So to go beyond that is sometimes we find it challenging. So we continue to have a roadmap focusing on new products in the cylinder business only at the present. We're not going anything outside the product line of the company and the core business of the company at the moment.
Understood. Thank you. My second question to Mr. Kapoor is, as you invest across plants, new plants and new tech and new formats like hydrogen and composites, I would like to understand, how do you decide where to spend first? Is there any system of capital allocation that you follow, which ensures short-term returns with long-term leadership in clean energy? I would like to understand your point of view on that, Mr. Kapoor.
So, Mr. Patil, obviously, we always look for value. So, if you are investing something, we will always look at the returns and the payback. And based on that, our decisions are taken.
Okay. That's fair enough. So, thank you for the guidance, and I wish you the best of luck for the next Q2.
Thank you.
Thank you.
Thank you. Before we take the next question, a reminder to everyone, you may press star and then 1 to ask a question. Our next question comes from the line of Reeth Jain from First Water. Please go ahead.
Yeah, congratulations on the good set of numbers. My first question is regarding the contingent liability. So I saw in the annual report that the GST liability 52 crores, which is roughly our net worth. So just wanted an update on this and how confident we are that we will win this GST dispute.
So I'll answer this. As I've already indicated earlier in my earlier discussions also, that we have gone for an High Court appeal for which the hearing has not yet come, and we also made representation to the government. So I believe that very recently government has announced that they will be having classification matters which will get resolved. So ours is also a classification matter, which we believe we have put it strongly and we should get a favorable reply.
Okay. So when is the next hearing date? Any?
Yes, hearing date is not yet available, but the GST Council meetings and other things are already announced, and by Diwali there may be lot many changes which may come about, and in that is going to be addressed.
Okay. So any question is regarding, are there any imports from China in India for the cylinder?
Yes, there are imports, but they are not so significant. Not such large imports are not there.
Okay. I'm asking this because our revenue in India for the whole year is close to 1,000 crores. So just wanted to understand the industry size. Is it a very small industry or I'm missing something?
I don't know. Sanjeev, how do you reply to this? Is it small?
No, I mean the industry size, we have not been able to really map that because very few data is available of our competitors. So yes, it's an industry which is growing for sure, and the imports, like Puniji said, are not much to impact.
Okay, got it, sir. And all the best for the future. Thank you.
Thank you.
Thank you. Participants, you may press star and then 1 to ask a question now. Ladies and gentlemen, to register for a question, please press star and then 1. Our next question comes from the line of Anil Jain from Equipassion Capital. Please go ahead.
Yeah, congratulations for a good set of numbers. I just wanted to know what's your take on India business? It has grown by 20% in the quarter and margins have at 17%. So how do you see the next quarter and the FY26 panning out in terms of India business? Hello? Yeah.
Yeah. Sanjeev, you want to take that? Or?
Yeah, so I'll take this. So we believe that obviously with lot many changes like the recent announcements, and we see a lot of positivity. So going forward, we expect that we'll do a good business here.
Do you think that this kind of growth and margin are sustainable for the rest of the year?
So we'll continue to want to achieve such margins, but obviously we want to be conservative too. So we'll always go for a conservative margin.
Okay, but what do you see the sustainable margins? Like, was there any one-off in the quarter or?
No, it's not one-off. I mean, it's like we do make efforts to ensure that we are having good margins available. So obviously there goes into strategy and planning also. So still, I would rather say that margins between 13-14 would be most ideal.
Okay, and what about growth?
Growth to 10 to 15% is what we are sure that it will happen.
Okay. Looking at the order book, you are expecting 10 to 15% growth, right? 14-15% growth. Okay, and what about your US business? It has shown like margins of quite good margins. So do you see that sustaining?
Based on our discussions with them, yes, they do say that they will continue to have good margins. And the quarter which has come, except for the exceptional item, we believe that they would continue to have good margins.
Okay. And what about UAE business? It has not done well in the quarter. So where do you see the next few quarters?
Dubai will still be moderate.
Okay.
So we are not saying much about UAE. So we'll they are facing
Maybe the capacity addition?
capacity addition is around 120,000 in Egypt,
Okay.
and India.
It is at 125 crore. So out of this, how much has been spent already? Till 30?
Mundra, I would say around 70 crores, and in India is around 90 crores.
Okay. Egypt is 70 crore and Mundra is 90.
Yeah.
Okay. And what kind of revenue potential do we have from Egypt and margin potential there?
I mean, right now we are still setting up the plant. We believe that once it works and we are able to, control our cost of production.
I'm talking about potential, not the actual numbers. What? Because you must be setting a plant, looking at some numbers.
So there we believe that get at least a reasonable margin of around similar to us.
Okay. And what kind of top line?
Top line, still, we're determining that. We could come to you separately on that.
Okay. Okay. And what is your current order book like in India business? How do you see this second quarter, the current second quarter and now?
It's continuous. I mean, we keep getting orders, we keep executing them. So
Okay.
we always have around 60 crores of order book.
Okay. Thank you.
Thank you.
Thank you. Participants, you may press star and then 1 to ask a question. Our next question comes from the line of Deepan Shankara Narayanan from Trustline Holdings Private Limited. Please go ahead.
Good evening, everyone, and thanks a lot for the opportunity. I joined the call late, so please excuse me if this question is getting repeated. So in the presentation, we have mentioned that company has this product mix was the key driver for margins improvement in India business. So can you throw more light on this?
Yeah, Mr. Deepan, so obviously the product mix always will determine. So at times we have to let go certain orders where the margins are lower. So we are trying to achieve this. And we are focusing more on high margin products.
So how was the mix between CNG and industrial kind of mix?
The CNG normally is in the range of 55 to 60%.
So that mix being normal only for us.
Yeah, so it will vary. I mean, I'm not having the exact, but obviously it's in this range.
Okay. So how do we expect these India margins sustaining at these levels or going back to our old margin levels of 13-14% itself?
So I have already answered this by saying that we will like to say this on a conservative basis.
Okay.
That's why I'm suggesting 14%. But we strive to get higher margins.
Okay. Because the margins has increased sharply to 17%, right? So that what is driving that is not understandable clearly. So if this the same case, it will get reflected in future. So what will drive that margins to 17%? Or if it's going lesser, then what is that understand?
No, we'll take it as it comes. I mean, I'm sure we'll wait for the next quarter to happen.
Okay. Thanks a lot. All the best.
Thank you. A reminder to everyone, if you wish to register for a question, please press star and then 1. Our next follow-up question comes from the line of Anil Jain from Equi Passion Capital. Please go ahead.
Yeah, what is your total net debt as of 30?
So, about various.
Gross debt?
Gross is 140.
Okay, and
On a consolidated basis.
yeah, I'm talking. And after this thing capex, will we be net debt free only, or will be there some debt?
Yeah, we are solving this capex through internal accrual as well as the borrowing. So yes,